quite a few pips down here, right? So what I'll do sometimes is I'll look at an intraday chart. Now, obviously, an intraday is not as important as a daily, but at least it gives us a sense of where support or resistance area is a little bit closer. If you have an occasion like this, where if you're looking at the daily chart, the first support would be here, but I want to get something a little earlier. And so we shift over to an hourly chart and notice this change of polarity here. Okay, this old resistance area, the zone over here, it breaks out and look what became support. So I would have this as my first support area, maybe a little closer here with a little bullish engulfing pattern, but my first support area here. And then again, looking, and there's an hourly chart, so it's not as important as a daily chart, but at least it gives you an area where potential support or resistance is ahead of the daily chart. Okay, so even if you don't trade intraday, it might be something to keep an eye on. So this is based on the intraday, this is based on the intraday, and this is based on the daily. Let's look at XLK. Okay, short-term trend is obviously up. All right, it's an all-time high. Okay, this is a weekly chart to show you it's an all-time high. So because we have no prior highs to key off of, what I do is just make the recent high a resistance area, especially it's a doji, but the trend is certainly up. And uh, this is the only resistance area I have because there's no other level to key off of. As to support, look at these little rising window here, and then the rising window here. And this one is particularly important. I'm going to focus on this breakaway. It's called the breakaway gap, where the market gaps away from support or resistance as one of my one of my favorite trading strategies. I'll discuss that in the second part of this webcast. But this should be really important support. You have two reasons. We have the rising window, and for those new to candlesticks, a rising window is the same as a gap between the low here is higher than is higher. There's no price action between the high here and the low here. There's a price vacuum. So we have two reasons for potential support here: change of polarity and the rising window. So I would view this as particularly important support. And something to keep in mind I just noticed here, candles don't give price targets. All right, so that's why it's so important to use Western technicals, which we really focus on also in our education. And one of the advantages of candles is you could use your favorite Western technical techniques. But the fact that it doesn't give you price targets gives you a reason why we should use measured moves based on Western charts for candles when you have a candle chart. So here, there's a box range, right? The Japanese call a lateral trading environment a box range. And once you break out of a box range, the target, now it doesn't mean it's going to be resistance, doesn't mean the target's going to be met, is the height of the box range. So as soon as the market got above this level here, this initially became a target. Notice the market continued higher, not unusual. This is normally a minimum target when you do a box range breakout. Okay, let's look at gold just very quickly. And then I'm going to answer one of the questions that um, we had sent to us. Okay, cold gold classic dark cloud cover right over here. That's when a red real body gets more than halfway into the green real body. The market gaps higher in the opening, gets halfway, becomes potentially a resistance area and a turning signal. So we had that, or the market had that over there. So that obviously becomes resistance level. Here again, we're talking, let me give you my first support though. The trend is down, maybe a little bit more neutral. Okay, a little bit of a plus over here. Now, what happens is when the market breaks a support area, notice all the support, it's rounding off around 32.75 in gold, support here, support here, support here. Notice a couple of yesterday, actually, it broke under it, but did not close under it. Now, for a market to be bearish, once the market breaks under support, change of polarity. This old support should be resistance. The fact that the bears were unable to hold the market under these lows here is a short-term positive. All right. I call it a crack and snap. The market cracks support, snaps back above it. So that is a short-term positive. And in theory now, the low of the crack and snap should be support. And here again, in theory, based on the crack and snap, the target is the most recent high, which is actually over here. Here again, be careful. It doesn't mean that the market's going to get there. Uh, but that is a target based on the crack and snap. And what's nice about the crack and snap is if you happen to buy it here, you'd place a stop under the low here. That's your risk. All right. So based on that, although there's a bear channel, that's why I have the trend is down. The inability of the bears to hold the market under the lows here, a little bit of a positive. We could see that with today's action over here. And as far as my next resistance is concerned, I'm looking right over here. Essentially, 4 consecutive sessions, the market stalled here. So I would call this our first resistance area and the dark cloud cover. And then let me look at the Nifty. And you can see these markets on over here are markets that I do on a when I do the recap. Okay, so trend is up, obviously. Here's a bearish engulfing pattern. And even if you don't trade the Nifty, anything we do on any of the markets, you could use in any of your markets, all the strategies, all the techniques, all the education. Doesn't matter if you trade the Nifty or not. You can apply it to whatever markets you look at. So as a bearish engulfing pattern, it now has a resistance area. Now, because these real bodies are about the same size, I wouldn't be too nervous about this bearish engulfing pattern. It's usually more negative if we have a long red real body showing you the bears are in control. But if you notice, the market's holding up pretty well over here. So that's why I have the short-term trend is up. And this becomes our first resistance area. And as I mentioned before, how do we get resistance when you're kind of in uncharted territory? On the price scale you're looking at or on the time frame you're looking at, you go back as far as necessary. So with that in mind, we're looking still at the daily chart. Notice it's falling window. Okay, the whole window is resistance. So right at the beginning of the window, the Nifty is showing a resistance area with a bearish engulfing pattern. Would I go short here? No. Maybe lighten up a little bit on longs if you're lucky enough or skillful enough to avoid. Maybe, but the market has resistance in the zone over here. And then if it closes above the top of the zone, my next resistance area would be actually from this falling window. And since the highs over here are so close, right over here, I would make it a zone of resistance. Now let's kind of expand the chart to show you where support is or potential support. Okay, so notice all the resistance over here. I'm going to make it a zone. Okay, all the resistance here, here, and over here. This, in theory, becomes a support zone now based on the change of polarity. What happens is people miss the breakout and they say to themselves, oh, I wish I bought it when it broke out. It's up here now. So if the market pulls back, the ones who missed the buying opportunity may consider buying. So this old resistance potentially becomes support. And then under that, right over here, okay, you might have a little bit over here also because there's like 4 consecutive sessions. But notice something interesting here. Again, a lot of these markets have this, a box range. All right. So once the market breaks above the top of the box range, okay, you take the height of the box range and add it to the breakout area, which is kind of right around over here. And that kind of gives a target to right over here based on that. So let me shift over now. I'm going to go to one of the questions that were asked. I'm going to get PowerPoint up. And okay. And let me share. I'm going to whoops, let me get the application here. Okay. And voila. Okay. So this is the question we had. How can you be consistently